Feel it's my time, think it's my year.
Yeah. Good morning, everybody. Welcome to the morning show. It's the best morning show in finance. I'm Spencer Israel here with JC Parets. Beginning on Monday, we'll have the band back together. Steve Strazza, I'm told, is back in the United States, although he's probably sleeping right now. I can't say I blame him. Probably very jet lagged. Anyway, on today's show, it's Friday. You know what that means, right? Crypto Friday, obviously. And we have a crypto guest, Meltem Demirors, at 9. Looking forward to that. We got to talk about some earnings. We got to talk about the Bank of Japan, apparently. I did not have that on my bingo card this week, Bank of Japan. But you never know, right? All right, good morning, everyone in chat. Good morning. Let's get the show on the road.
Early night, Spencer. You know, I don't normally get home when it's daylight, when I got a day in the city.
All right, I'm proud of you, I guess.
Yeah, it was too hot to be in the city, man.
Oh, dude, summer in the city when it's hot, can be absolutely brutal.
It was tough, man. It was hot. You know, I like going to the city when it's nice in the spring and the fall, walk around Soho. Yesterday was not one of those days, although I had a hell of a lunch, man. Tried a new omakase spot. You know, that's my thing. I like to go to different omakases in the city. Genko Sushi. It was right by Genko Sushi downtown, right by Washington Square Park by NYU.
Okay.
Excellent. Well, affordable too. Good price for omakase. It's good. They don't have, you know why it was good price? Because they don't sell booze. They don't have a liquor license. So they actually just give you house sake or beer. It's like on the house because they can't sell it to you.
They can't sell it.
That's why I was wondering why it was so affordable. That's the reason, because I'm not dropping a couple hundo on a bottle of sake.
Makes sense.
So there we go.
There we go.
And then we had shout out to our friends at the Compound and Friends. You want to sell their slide 2. Josh Brown, Michael Batnick. Ritholtz just jumped in for the picture. He was not in the podcast. Maybe we should have Ritholtz on the next one. That'd be fun. Check it out. It's not on YouTube yet, but check it out on Spotify or iTunes, wherever you listen to your stuff. It's great. I mean, listen, if you're here every day with us, you kind of know what I was talking about, but it's always fun. Nice little back and forth with old pals, right? Good times. Shout out to the Compound and Friends podcast.
Michael has been on the show. Josh and Barry are on the to get list for this show.
We'll get them for sure. 100%.
Yeah. One day.
Yeah, they're down.
Okay. And you don't know what time it's going up on YouTube, right? Because I'm more of for that show, I'm more of a YouTube guy.
Well, it's two things. Their YouTube show is usually shorter than the podcast. The podcast is longer, gets everything.
I didn't know that. Okay.
But for when I'm on, we look at a lot of charts, obviously. Right. So you know the YouTube helps for that sort of thing. But you know, if you want to get all the conversations that we had.
Yeah, wait. I want to say Sam's comment. Going back to that show from January when you were I think that's the last time you were on, right? It was January.
Yeah.
Sam's like you blew their minds. It's pretty funny. It was funny.
I feel like we didn't like yell at each other that much on this one. Like it's usually better like when we're fighting over something. Like there was very little arguing. It was too kumbaya for my taste. In the old days, we used to drink tequila. I would do their podcast. We'd be drinking tequila, we'd be drinking beers. Now they got me drinking seltzer water. Full market, man. Bring out the booze.
Everyone's in a good mood. Nobody wants to fight except maybe the Bank of Japan. I don't know. All right, you want to do that?
Let's do the Bank of Japan, and then we'll go state of the markets.
Yeah, and then let's save some of the crypto stuff for Meltem, right? Because obviously that's what she's going to talk about. So
why don't we do crypto? But the state of the markets is the crypto markets. Let's get into the markets. Why don't you tell them what happened? Why don't you tell them what happened with the Bank of Japan?
Yeah, Bank of Japan. Today I guess yesterday I learned apparently that it is among a certain group of investors. It's a very popular trade. maybe these are Japanese-based investors, I'm not sure, to be long U.S. equities, and not well, obviously not long Japan. That makes sense, right? But this announcement, this surprise announcement yesterday, second announcement from the BOJ in the last few months, that they've basically widened the band on their yield curve control, basically signaling that they've been dovish. They're the only central bank in the world, right, that's been dovish for as long as they have, right? Every other bank has pivoted. They have not. They're like inching towards a change in stance very slowly. I guess that's what shook markets yesterday. That's what sparked the huge
Are you
reversal.
referring to the yen carry trade? Is that what you're referring to?
I guess so.
Yeah.
Yeah.
It's been the thing for many, many, many years.
I didn't really know that.
Because you could borrow it so cheap, they go out and sell it and use those proceeds to buy risk assets.
There you go. Well, risk assets were not in favor yesterday. Q reversal, Q end of the winning streak in the Dow yesterday, and Q a reversal across the board. Although what's interesting, and I don't understand this. The EWJ, right, which is the Japanese ETF, did not sell. Is this an ETF that holds Japanese stocks? Did not sell off yesterday at all. Although there was a huge volume bar at 1:00 when this announcement happened, but that the price action in that does not tell you anything about what happened yesterday in Japanese economics, because and Japan, Japan equities clearly were down, right? Japan equities were down, U.S. equities were down, but the EWJ for whatever reason was flat. I'm not quite sure what's going on there. So anyway, that was, I guess, the story yesterday.
And it's a big nothing burger. Look at the charts.
Look
at dollar yen. This is overnight. This is a 30-minute chart, and look at euro yen. Same thing. They sold it off. They brought them back. They sold them off again. Now they're bringing them back again. And you can see here in the dollar yen chart in slide 3 here, looking at that monster lower high. Just kind of keep that in mind. Maybe a little stronger yen. Maybe.
Maybe. I don't really know anything about the trading forex pairs or.
Well, I think
that's why I have you and Ian.
Well, let's remember that this is really what's driving equities, right? It's not earnings, it's not fundamentals, it's not the Powell or the Trump or the sequestration or whatever it is. That's the talking point of the day. What drives equities is forex and fixed income. It's the bond market, it's forex markets, and when you're seeing this dollar weakness that we've seen over the last several quarters, stocks really, really like that. So, for a long time, Japanese yen was a safe haven. It was very defensive. When stocks would be under pressure, they'd be selling stocks. They would be unwinding their yen carry trade, and the yen would rally. Last year, we just didn't see that. Stocks were selling off. Yen was making new 20-year lows. So, that negative correlation is just not there. So I'm focused on the dollar in general. The yen is, I believe, the third largest component of the dollar index after euro and British pounds. Might even be the second largest. But nevertheless, big top 3 component of the dollar index. So if this chart is going down, and yen's getting a bid and euro's getting a bid like we're seeing today, that's a positive for equities. It's a positive for risk assets. I don't know how good it is for crypto, but I wouldn't say it's a bad thing for crypto.
And on that note, let's do Crypto Fridays, everyone. Because on Fridays, that's what we do.
No doubt. Nice little Crypto Friday there, Bumper. Did that look? Was that as good for you as it was for me? Good.
It's probably about the same.
All right. Let's start out with the big boys here. Slide 6. Kind of just to talk about the state of Bitcoin and Ethereum. Bigger picture. These things are absolute monsters. Finding support at those former highs in the prior cycle. Kind of just generally speaking, we don't really want to be short these things. Or have any, from any sort of intermediate term time horizon, like maybe for a few days, a few weeks, knock yourself out. A bigger picture, this is something that we want to be looking to from the long side. The trend here is not down. It's either up or sideways, but not down. And I continue to think that, a high volatility move is on the horizon. We've already started to see a little bit more volatility than we're used to. If you want to go there to slide 7, a little bit more volatility than we're used to. But when these Bollinger Bands have contracted to these levels, from volatility contraction comes expansion, and that's what we're looking for. And I certainly don't want to be in front of that train if volatility expansion comes with lower prices. Just take a look at the Bollinger Bands. We were looking at the Bollinger Band width before. These are the actual bands themselves, widening a little bit, starting to see that volatility expansion. I don't think it's done yet. And then this is the big one for me. This is here slide 9. This is Bitcoin breaking down, breaking key support last year, and now back to the scene of the crime. Failed to get above there in the spring, failing to get above there again, failed 4 weeks in a row. That was enough for me, as you guys recall. 2 weeks ago today, as a matter of fact, I got rid of everything in my crypto portfolio, including all the Marathon that I own, the options, everything gone. Zero exposure to Bitcoin, Marathon, Riot. I got nothing. I got some private investments, of course, and I got some, stuff that I'm not touching that's just there. But in terms of anything very meaningful, especially on my liquid stuff, I got nothing. I got 0.0 exposure. Like I said, I got a little tiny bit of exposure on some of my private investments. I would say not a little tiny bit, maybe I would say 5% of my net worth is in probably private cryptos related investments, right? But I can't touch those. And then short term, go ahead.
You know how people always say, like, even if you don't directly own Chinese stocks, you're still exposed to China because China's so big and Apple gets their revenue. All these companies get their revenue from China. You know what I mean? Will Bitcoin get so big one day that even if you don't own Bitcoin, you still own Bitcoin? You know what I mean?
Well, I think Bitcoin is one of those assets where if the risk of not owning it, the risk of not being long is essentially you're short, right? Because the potential upside is so exponential that missing that trade, it could be so problematic for longer term returns. So I think that's the risk. So like to your point, to add to what you were just saying, like if you're not long technology, like you're essentially short because they're such a big part. I think Bitcoin is one of those things, and here I am telling you I don't own any. So just to be clear, but I've obsessively over the last couple of weeks really been watching how this transpires. Check out slide 10. You can see Bitcoin breaking down to new 30-day lows, breaking this consolidation, resolving lower, not resolving higher in the direction of the underlying trend. So considering what we're seeing here, based on what we're seeing in slide 9, that Bitcoin is literally failing at these resistance levels again, and you can see that zoomed in look on slide 10. Now, on the bright side, I suppose, if you're one of these laser eye people or the hands of diamonds or whatever, Ethereum has not broken down to new lows. So if you're looking for a bright spot, if you're saying this Bitcoin breakdown could potentially be just like a failed breakdown, it's not actually going to break down. Right? I think looking at Ethereum holding its own, to me, that's really impressive. And I think speaks to maybe Bitcoin bounces back and gets back above those, 30,000 levels, and we rip from there. And that'd be fantastic. I would be a buyer in that scenario. Currently, I don't own any. And look at Marathon, hit that $20 target. I was very impressed by just how strong these names were, despite Bitcoin not breaking out. And a couple Fridays ago, I'm like, this Bitcoin failing again and again and again is not for me. I don't want anything to do with it. Sure enough, here we are still stuck below 20. If Marathon's able to break back above 20, I like this. Coinbase is similar position near this 115, 120 level, running back into last year's highs, right? So mission accomplished here on the Coinbase and Marathon. Nothing really to do until they're able to break out above those levels. I don't know if they will soon. Maybe it takes a long time. Maybe they never break out at all. I have no idea. But I think I think that we ultimately do see a breakout. We want to be buyers of that. MicroStrategy, similar situation, right? A lot of these are just running into key levels, right? Bitcoin's added and Coinbase and Marathon, MicroStrategies, they're all right there. Is this really where you want to be entering a trade? I mean, you're welcome to do anything you want. I'm not in it. Solana, again, another one, key level here at 25. Below 25, you can't own Solana. That's a really, really big level going back several years. Above 25, I don't have a problem with it. I think there's cleaner trades out there, most definitely. I don't own any, but above 25, I don't hate it. And Doge, this is Spencer's personal favorite. This is above 55 cents, and the trend is not down, right? The trend is not down, and it's not 55 cents. It's a nickel. That's labeled wrong. It's 0.05. But as we discussed last week on the show, we take out all the zeros after the decimal point, and we just call it 55, right? It's actually 0.055. But then you got something like Shiba Inu, which is like 0.000000027. So like, silly. So 55 is a good level here. And if we're above that, then the trend is not down. It's either sideways or up, but it's not down. And I think that's something to keep in mind. Spencer, what do you think?
You lost me at like the third zero, but no, in all seriousness, I mean, yeah, I've always said this, whether it's Dogecoin or like GameStop or any of these memes, you have to respect the price, right? Like the price is what it is, and the fact that it's held a certain level, it demands respect for that reason and that reason alone, right? Like, and the same can be said about GameStop. Like you have to respect that it has still held on to some portion of its gains from when the virality first happened 2 years ago, right? So,
well, for the record, Dogecoin is worth double what GameStop is worth.
I know,
and it's pushing $11 billion in market cap. For those of you keeping score at home, it is the 8th largest cryptocurrency in the world, larger than Solana, larger than Polygon, Litecoin, Avalanche. It's larger.
I mean, like I think it's silly, but like you can't argue with the price. You know what I mean? So we're. Credit to Dogecoin. I don't understand it. I don't have to understand it. It doesn't matter if I understand it, but credit to them. If this chart says everything, right? It's held on to more than half of its gains from when it first went viral. So good for them. I don't know.
Listen, got to respect it. And then let's finish up here with the dollar index, because I think that this is it. We talked about what happened in the yen overnight. We talked about the negative correlation that we've seen with the dollar index and equities and risk assets in general. And if the dollar's rolling over here and you're holding below one and a half, which we currently are, interesting little test yesterday. Everybody and their brother, as you saw, thinks that they're a Japanese candlestick aficionado. Everybody talking about engulfing patterns and outside days. And listen, I've been around these parks for some time. When everybody thinks they're an expert in something, and a candlestick is so ominous that there's so many implications from this ominous candlestick from one day, and everybody agrees. Chances are it's probably not that big of a deal. I just want to reiterate something. Do yourself a favor. If you want to save yourself some aggravation, take this advice. Weekly candles are way more important than daily candles. Just remember that. And if you take a look at one candlestick and it makes you want to do anything to your portfolio because of one candlestick, why don't you take the old Phil Perlman advice and go for a walk?
I see it every day on Twitter and on Reddit, people freaking out about one day's worth, not even an afternoon, not even a full day, an afternoon's worth of price action. Like, what happened today? I'm just like, oh man.
Weekly candles, guys. We stress monthly candles, which, by the way, we're getting in a few days, which I'm pretty excited about. I'm not gonna lie, very excited about that. But nevertheless, weekly candles, man. These daily candles. You look at too many daily candles, you could go blind. That's how I heard.
Yeah, weekly over daily, monthly over weekly. And I guess yearly. I guess yearly too.
I don't do the yearlies and the quarterlies. I do for fun sometimes, just to be silly, but it's not anything that we're actually. You know what I'm saying?
Yeah, I hear you. Yeah, and speaking of daily candles, right? I mean, the daily candles in let's see, the Dow, what was that, a bearish engulfing candle in the Dow yesterday?
Let me tell you something. Go back and study any bull market you want. Pick your favorite bull market, and you know what you're gonna find along those bull markets. You're gonna find some pretty ugly candles along the way.
Yeah, just busting your balls. All right.
Yeah, I mean, we're on the same page. We're saying the same thing.
All right, should we do some earnings here, and then we'll get Meltem on?
I know you want to do earnings. What's more exciting? Does Spencer get more excited about earnings or JC about monthly candles?
Good question. You probably about monthly can. Actually, no, I don't know. It's close.
I don't know.
No, it's close. It's definitely close. Hey, I think next week is Apple. Anyway, whatever. Where's my earnings?
Is that like your Hanukkah?
Apple earnings is like my Hanukkah. Yes, very similar. All right. Let's talk Intel here for a second. This is one of those reports that seems good, although I don't know how good it actually is. They beat the estimates on their EPS and their revenue, and they gave upbeat guidance. Their guidance was, let me pull it up here. Guidance came in above estimates for their earnings per share and for their revenue, and they were profitable, right? If you think back to the last, last 2 quarters, I think Intel has not been, they've lost money. So they're actually profitable this time around. But why were they profitable? Mostly because they're cutting costs like nobody's business. This is a quote from the press release. We have now exited 9 lines of business. I guess the conference call. We've exited 9 lines of business since their CEO, Pat Gelsinger, rejoined the company. With a combined annual savings of more than $1.7 billion, they are just shedding parts left and right. They talked about how demand is going to continue to be weak for most parts of their business. But because they're cutting costs, they're profitable. So I guess that's good. But
take a look at the long-term chart. Whenever in doubt, zoom out, Spencer.
Yeah,
take a look at that nastiness.
So it's up 7% this morning or whatever. But ask yourself if that's really what you want.
Nasty.
I don't know if that's really what you want.
It's not what I want.
Yeah, no.
I mean, listen, this thing could go up, right? This thing could go up. But if you're going to make any bet at all in any market, any asset class, you could do anything you want with your money.
Yeah.
Is buying Intel what you're going to do with your money? I'd rather I don't know. I'd rather set it on fire or something.
Yeah.
At least we get light out of it, the heat.
Plus there was a comment how demand for their broad portfolio of core processors is just structurally weak because of AI, right? So I don't know.
Take a look at slide 2 there. Shorter term.
I mean, congrats on the stock this morning, but I mean, yeesh, not.
I mean, this is just not something I'm trying to buy. If you want to buy this, you want to trade this, knock yourself out. It's not for me.
Yeah, no, I agree. All right, let's move on. Let's talk about Ford. Who just mentioned that? Investing Heavy just mentioned Ford in the chat. They had a good report. So many headlines here. EPS beat, very nice beat on the EPS. 72 cents versus a 55-cent estimate. Their sales beat by $5 billion, and they raised their guidance, their EBIT guidance for the year. However, they did caution that they're going to have to spend so much money on their EV initiative. It's going to be a continued headwind for them. So they cautioned on that. But I guess the numbers themselves are okay. Let's see. Do we have any EV stats? Their goal is to produce 100,000 EVs in the 4th quarter of this year. What else jumps out to me here? Not much. I mean, yeah, the numbers were good. Obviously, a big beat like that is going to help the stock. So that although it is down this morning, but it was up after hours. So go figure. I don't know.
You're boring me, Spencer. Seriously, take a look at slide 1. Just to reiterate, just how it's not Spencer's fault that he's boring. It's the stock's fault. It's not your fault, Spencer. If it was, I would tell you.
Wait, for a very brief moment in time, Ford was a high flyer.
Listen, I know that you spent like 7 years in Michigan. Nobody gives a shit about Ford and
Is my Michigan bias showing now?
it is. It's oozing
Uh,
out of you. Nobody gives a
I'm
shit
sorry.
about Michigan, except for people. Listen, I got no beef with Michigan, but like, I'm not gonna get like sensitive about it, right? In fact, I love people from Michigan. I have a lot of friends in Michigan.
Yeah, is my Michigan bias? I'm sorry. Yeah, maybe 7 years in Michigan, will make me care about Ford more than I perhaps should.
Yo,
But
Greektown in Detroit. That's my spot right there. That's my spot.
Ford.
Hold on, who's got better Greek food, Astoria or the Dirty D?
I really couldn't speak to the Greek food in Astoria. So
You never had Greek food in Astoria? You guys, do you not cross rivers in New Jersey? Like, what's wrong with you?
I don't think you realize how much of a pain in the ass it is for me to get to like Brooklyn or Queens or anything like that.
Really, you live in Astoria for Greek food?
No, not for Greek food. No, I mean it might be close, like as the crow flies, but
Oh man, take your wife to a nice meal in Astoria.
Dude,
a nice Greek meal. It's gonna cost you like $20. You're gonna get out of that meal real inexpensive.
Can I tell you, I live right over the bridge from New York City. I haven't been to the city since the middle of May.
There's 2 rivers you need to cross to get to Astoria, by the way.
That's a lot, is my point. Anyway,
a lot of rivers. It's a lot of rivers.
But to answer your question, the Greek food in Detroit is extremely good. Let's move away from Ford. Since oil is all the rage, just look at Exxon here. They're out this morning. EPS a little bit light. Sales beat. Did not check on the stock yet. Let's do that now. Flat, mostly unchanged.
You know, I gotta say, Spencer, man, the Exxon Mobil, which is the bellwether of energy, you can argue it might be Chevron, but it's probably Exxon.
Is this a warning sign or what?
No, quite the opposite. The fact that crude oil has gotten cut in half and Exxon Mobil continues to push up against all-time highs, that I'm impressed by that. Like, I own Chevron, I don't own Exxon, but if I own this much Chevron, you could say I probably own Exxon indirectly.
Yeah.
I'm very impressed, Spencer. I really am. I gotta say. I mean, oil got cut in half. If I would have told you crude oil futures get cut in half, are you betting that Exxon's pushing against all-time highs? I'm not.
I guess I was mostly referring to the fact that it stopped going up, but I guess it's held that line. So yeah, I'm for it.
Yeah, if it's above 105, you can own this all day.
Okay.
Yep. And I'm in the Chevron, so like I'm not in this.
Yeah. Let's just stay with energy for a second here, and we'll go to the other side of the coin. We'll look at First Solar and Enphase if we have time. Opposite directions here. First Solar up 11% this morning. Enphase down 13%. First Solar a beat and a raise. Was that a raise or just a beat? A beat on guidance as well, I believe. So that's why that stock is up.
First Solar's got this 300 written all over it, man.
300. What?
Yeah, 300. Back to the all-time highs. What?
Okay. I mean,
is that not good enough for you?
It just broke 200 this morning. You wanted to go to 3 already?
I'm aware.
Okay.
Yeah, it's not that big of a deal. What is that? Like 40% move?
Yeah,
40% move.
Yeah, about.
Yeah, it's up 11 this morning. So I don't know, 4 more mornings like this, and it gets to 300.
All right. Now you're starting to sound like Pat. Next thing you know, you got a date with 1,000 over here.
Well, I mean, it's a big base, right? 15-year base. Yeah, I'm not saying no.
Yeah,
I'm not saying no.
And then let's do Enphase just real fast. This is probably one of your big losers of the day. I don't really care what their numbers are, but the stock is down 13%. What do they say? Revenue missed. They gave very bad revenue guidance. Holy cow. The estimate for the revenue guidance was for Q3 $748 million. They guided in a range of $550 to $600 million. Ouch! They did announce a $1 billion buyback, so they got that going for them, which is nice. But that's a big miss on the revenue guidance. Woo! What do you think here?
I think it's a mess. I think there's no reason to be in this in the first place. It's just a sideways range. You leave it alone. Now it's towards the lower end of the range. So now, I'm interested near 120. I don't know. I might. How low is it right now? It's 144. It's nowhere near 120. I don't know. If it sells off towards 120, I might take a look. Very similar to this AbbVie sort of situation. Caterpillar a few months ago, down towards the bottom end of the range in a long-term uptrend, which Enphase obviously is. But right in the middle of that range, it's not for me.
All right, let's pivot back to the crypto and bring on today's guest, shall we? JC, who we got? I'm excited for this one.
Meltem Demir is in the house. Shout out, Mel. Bring her back. Bring her in. Let's go. Back from Paris. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey.
Meltem, what's up?
Do you know it's another week in crypto land? We're nearing, the end of July. We're seeing Q2 results coming out for public companies. We're seeing a real lack of liquidity in my world, the world of all things crypto. And JC, you and I trade notes often on the Bitcoin chart. So lots to discuss. And, I think the big thing we're looking for, we've been range bound for a while now. What's going to be the outbreak to the upside or the downside? Because traders, we need that volatility, and there's no juice in this market right now.
I love it. I just want to hear more. Just like shoot it into my veins.
Wait,
Meltem. I love what you're saying.
Meltem, I want to know what was your reaction when JC told you he sold all his Bitcoin?
Sorry, my reaction to what?
When JC said he sold all his Bitcoin.
Yeah, look, JC does this to me all the time. We were hanging out in New York like a month ago. He's like, I'm buying Bitcoin. He asked JC for the first time in the 6 years that I've known him, asked me, is it possible to own enough Bitcoin? And I said, it's absolutely not possible to own enough Bitcoin. You can never own enough. And a month later, he's turned around and sold it. Look, JC and I are a little bit different. JC, you guys, you're looking at the charts. You're approaching this in sort of a very quantitative way. You're looking for patterns. I'm a little bit of an ideologue. I recognize sometimes my approach to things is not completely rational. So we're a little bit different in that regard. I'm a little bit of a missionary. I've been converted. I'm a member of, believer of the Bitcoin gospel. But look, JC does this to me all the time. But I will say a month ago, JC was questioning if he could ever own enough Bitcoin.
Right, because I was in the camp. I'm like, yo, if this Bitcoin breaks out above 31,000, I don't own enough, right? Like that's what I was looking at. And I had a lot, and I had a lot of the marathon. Like I was in. But I didn't think I'd be in enough if we broke out above 31,000. We didn't break out above 31,000. We still haven't. And a couple of weeks ago, I said, you know what? It's not for me. I'll put it all back on above 31. In the meantime, I don't need this aggravation, right? It's sort of how I look at it. But Meltem, let's put the squiggly lines aside and the triangles and
the lines and the triangles. I love the lines and the triangles.
Put them aside for a second.
The combo, your lines and triangles. I'm like, take me to church, take me to Satoshi.
So take me there. Take me to church. Why don't you tell me? Forget the squiggly lines. Forget the price action. We understand that we've been in a range for some time. Talk to me about the state of the markets. Like, are you seeing investments on the private side? Are you seeing investments in the altcoins? Are you not seeing that at all? To your point, in terms of lack of liquidity, what are people saying? Like, what are developers talking about? Like, why don't you give me some insight on that side?
Yeah, and shout out to Peter. I am such a hand talker, so I apologize in advance because I'm going to do this a lot. And the more excited I get, the more frenetic my hands get. So.
Me too, Meltem. It's all good. Shut up, Peter.
No, keep it coming. So look, I want to take a step back. I think there is a really important sort of macro picture that's unfolding. Let's start with what's happened in the crypto ecosystem over the last 12 months. It has been, and excuse my language, it has been an absolutely catastrophic shit show. Okay. Over a year ago, we saw the implosion of Luna and that whole Luna Terra 20% yield on your stable coin sort of Ponzi scheme that was going on there. Look, any rational person is going to look at that and say, how do you deliver 20% yield consistently? The answer is you absolutely don't. So
Ponzinomics. It's literally called, they even call it Ponzinomics.
Look, and we'll get into like where the industry is going, which I think is pretty compelling. So that imploded. Then in November, FTX, obviously, that was insanity. After FTX, Bitcoin dipped to around 15, 16,000 range. Three arrows imploded, DCG Genesis imploded, the centralized credit part of the crypto ecosystem that was really providing the liquidity to market makers, trading firms who were making the majority of volume on both centralized and decentralized exchanges. They went fucking poof overnight, right? And so that was really important. Now, 6 months, 7 months into the year of our Lord 2023, Bitcoin rebounded all the way to 30,000, right? So Bitcoin for the year is up around 50, 60%, which I think is pretty impressive. If we look at the S&P 500, right, about up 20% year to date, also pretty impressive. But in context, I think Bitcoin continuing to rally and hold this range it's held in spite of all of this insanely negative news, including now, attempts to take down Binance, which is by and large the largest facilitator of liquidity in the crypto ecosystem. It's pretty remarkable that all of these negative narratives have not dragged Bitcoin down further. If we look at the positive sentiment, right, the catalyst for positive sentiment, BlackRock filing for an ETF, we may finally, right, yesterday, House Financial Services, or early this morning, House Financial Services was voting on a set of bills introduced by FSC Republicans, and it's pretty, I think, pragmatic. So we might finally see like some kind of semblance of workable regulatory guidance in the United States. United States still is by and large the world's largest capital market. We're seeing an increasingly pro-Bitcoin stance in the media. And obviously, the catalyst of all, BlackRock, when Daddy Fink gets on TV and says, hey, we're optimistic about Bitcoin. Bitcoin is sort of like international currency for the world. We couple that with the AI narrative. We're now going to have all of these AI agents, everywhere in our lives, on the internet, in digital space, and they need a currency to transact that's digitally native. Like Bitcoin and crypto generally is a great medium for that. So we have negative catalysts. Bitcoin, despite of all of those negative narrative catalysts, held and rose in price. We're now holding this 30,000 level despite a bevy of negative news and some positive news. And so I think what we're really seeing right now is apathy, right? It's summer. People are on holiday. Like everyone I know is on an island somewhere drinking rosé. And so there's apathy. If we look at the private side, people are not buying. Very quiet. Venture activity is down to quarterly low. We haven't seen this low of levels in quarterly crypto venture activity. I think about 3 years. Sequoia yesterday, big announcement, world's largest venture fund after SoftBank came out and said, we're reducing the size of our crypto fund from 600 million to 200 million because we simply do not see opportunities to generate return in the growth stages, which is where they wanted to invest. So they're going early stage. So I think it's just what we're seeing is apathy. And we see this quarterly crypto trading volume, right? I'm looking at a chart right now. I wish I could share it. Quarterly crypto trade volume is at the lowest level in Q2 that it has been since 2020, right? Which is when we saw this boom of DeFi summer. And so all around, we see apathy. And when we think about, how narrative and price are related, price drives narrative. And narrative also drives price. I think in crypto, sometimes we have this idea that the narrative is more important than the price action. And I think it's still the case. The biggest driver in crypto is flows, inflows, outflows, trade volume, open interest when it comes to the derivatives side. If we look at those metrics, if we look at liquidity, if we look at trade volume, if we look at net long versus net short, right, where open interest is, how that nets out, we just see apathy all across the board. What we need to see, in my view, and JC, maybe we can get into the charts, is we need to see a catalyst on the price side for us to figure out what Q3, Q4 is going to look like. Right now, we're not seeing it.
Let me ask you this, Meltem. So one of the reasons I sold a couple of weeks ago is that I don't remember ever seeing this much good news for Bitcoin and crypto, like ever. Like a Ripple is not a security. Daddy Fink, as you refer to the gentleman, is pounding the table. And then Fidelity and Vanguard bought like Riot blockchain a big percentage, and Mara. Like I don't remember there being this much good news, and Bitcoin couldn't break out. So I was like, you know what? I feel like this smells a little stinky.
Right.
I'm out. Now let me ask you this. So hold on. So yeah. I'm everything you're saying, Daddy Fink and Fidelity and Vanguard, all these things, everybody sees that, right? I think that to a certain extent, a lot of that is already priced in. Like, we're going to get the ETF. Like, we know, people know. Like, it's not like the day the ETF is launched, it's not going to be like, oh my God, it happened. Like, I feel like it's coming and everybody knows it's coming. The other side of the coin, I was having lunch yesterday with somebody and we were kind of having this debate, and he's doing all of the math on all of the assets worldwide that will potentially be in Bitcoin if there are vehicles like ETFs to express a thesis like that. And this gentleman was telling me that I am underestimating just how powerful that can be. Right. Okay. So is it that everybody knows and it's already priced in, or is he right and I'm wrong, and the market is under calculating just how much flow they can get?
Okay, so let's get into it. So these are all great questions, and I fully agree with all of this positive news, right? Not seeing price action, not seeing the translation of sentiment into people smashing buttons, right, at their trading terminals. That's problematic, right? And again, I think indicative of apathy. People have gotten burned. And also, we can't forget there's a still liquidity crisis. Access to crypto credit is very limited. The ability to borrow, right? The ability to lever up, the ability for large firms to trade, that's gone. A lot of the large shops are out of the market because they imploded, or because they are being more prudent on risk management, particularly when it comes to counterparties, because that didn't go so well last time. Okay, so all of this positive news, all of these assets that could come into Bitcoin. So let's get into that. So a couple of weeks, I put together a chart just for my own purposes. And I said, okay, let's look at all of these large financial institutions and figure out how much AUM is there that could actually flow into Bitcoin. And this is something I think is very important to do, right? It's sort of like the TAM for Bitcoin. And Fidelity came out and said, Bitcoin's going to $1 million. I'm like, let's take a step back. First of all, you need to apply time scale to that. And second of all, we need to think about, if Bitcoin's at $1 million, what's going on in the rest of the economy and with other
assets. Who cares? Me and Meltem are in the Mediterranean somewhere drinking rosé.
Because in that world, a banana costs $1,000, JC.
Yeah, JC.
Yeah, but Meltem and me will be able to afford that $1,000 banana.
Speak for yourself, JC. I'm over here, grinding. I want to own as much Bitcoin as possible. We'll get into that. Okay, so if we look at all of these financial institutions, BlackRock, 10 trillion. Vanguard hasn't done anything yet with digital assets themselves. Yes, they're dabbling with publicly listed crypto adjacent companies. I think the narrative around Riot and Mara isn't just Bitcoin exclusively, though. There's also an AI and high performance computing data center narrative that's as important as the Bitcoin narrative. Vanguard's 7 trillion. We've got JP Morgan, 3 trillion. We've got a bevy of others. Fidelity, I think, at about 4 or 5 trillion, right? Fidelity actually has been kind of flying under the radar, but they've got a whole platform for advisors, all the way from education to products, to custody, to trading infrastructure. So that's pretty impressive. So altogether, when I added up the 10 institutions in the United States of America that are doing things with crypto, excluding Vanguard, I don't think they're doing anything quite yet, we're looking at 27 trillion in assets. Okay, that's a decent amount of money. Bitcoin today, market cap around, 500, 600, 700 billion, depending on the price that day. So 27 trillion, right? The other thing
I think it's less than that. It's 570 right now.
570, there we go. Yeah, so it hovers between, like I said, I typically benchmark in my brain 500 to 700 bill. I think is good estimate. So 27 trillion in assets, not all of that's going to move into crypto. So then the second question becomes, where are these flows going to come from? And are these people who have not been able to access Bitcoin today? So in my view, there's so many routes for people to get exposure. We've got Grayscale, right? GBTC, terrible product in terms of tracking error, but it is a really easy way to get exposure because you can access it through the platform where you already manage your entire portfolio, right? Easy to access. We got GBTC. We've got MicroStrategy, which trades effectively as Bitcoin ETF, because really the asset
leverage, though, it's like a leveraged ETF.
It is, exactly, right? Because you've got Michael Saylor, hovering over there to God knows what. He's a wild card, and we love that, but wild card. So we've got MicroStrategy, de facto Bitcoin ETF. We've got every retail trading platform, Robinhood, SoFi, you name it, offering access to Bitcoin. We've got Square's Cash App offering access to Bitcoin. So all of these people, right, who want to access Bitcoin, do they not have exposure yet today? That's a good question. To me, the biggest opportunity and the part that's missing, and this is why I really am watching Vanguard, tax-advantaged retirement accounts are where the money is at, in my view. It's not the institutions. It's not, the institutions are already here, my friend. Like the institutions are here.
I don't know about all that.
I think so. The institutions are here. The ones that want to get exposure are getting exposure. There's a huge
They're just starting to get exposure, Melton. You can't say the institutions are here.
But
it's $600 million. That's nothing.
But Jason,
$600 billion.
But let's be realistic, right? If I'm an institution that's managing, say, a $500 billion portfolio, I'm not allocating $10 billion to Bitcoin.
First of all, how many $500 billion portfolio managers are there?
Not that many.
Right.
Wait, hold on. Don't you think the 401k providers and whomever, they're going to be the last people to in the door?
Possibly, Spencer, but they're where the money is. Retirement, tax advantage retirement accounts.
Sure.
One, super sticky, 97% annual retention rate. That means people do not reallocate or turn over their portfolios on a regular basis, number one. Number two, right? This is something that is really important, is the tax advantage component. I think will be a big catalyst. To date, it has been very difficult to buy Bitcoin and other crypto assets in a tax advantage portfolio that is self-directed and isn't through a structured product that is very expensive to maintain. And so I think 35 trillion in tax advantage retirement assets in the United States today.
What it is, 35 trillion?
35 trillion.
Oh yeah. Yeah, and it's going to be growing exponentially.
Melton, listen, before we Spencer kicks you out of here, can I get an altcoin? We talk all this Bitcoin. Can I get a non-Bitcoin call out? Anything out there you like? You buying the Doge? Little E?
No, I do love meme coins. What I'm watching right now is AI coins and anything related to generalized computing platforms. So basically, if we turn computation into a fungible, tradable asset, what would that look like? I think, again, crypto tokenization is very useful here.
Is there anyone that's big enough that you feel comfortable talking about on the show?
I'm an investor in and a big fan of Render. That is a distributed GPU network that has its own native token.
RNDR?
Render, yep. Render was built by the company Otoy. It's one of the largest digital rendering companies in the world. They do a lot of high quality, high compute intensive rendering for studios like Pixar and a lot of Hollywood studios.
Where can I buy this? Where can I buy Render?
Look, I think Render.
Your 401k, JC.
No. But do I have can I get it on Coinbase or do I have to go to one of these funky DeFi protocols?
No, I think it's listed on Coinbase. I do believe it's listed on Gemini as well. By the way, people are sleeping on Gemini. I use Coinbase and Gemini both. I quite like Gemini and Coinbase. They're both great. I think.
Is there a third exchange you like or no? Or those are two big ones?
Those are the two centralized exchanges I like. The one thing I like about Gemini is their Pro Trader interface is really nice. And for people listening, definitely sign up for the Pro Trader platform.
Can you tell me Coinbase is for boomers?
Yeah, the Coinbase interface is just very difficult to use. They've done a good job cleaning it up. I mean, it used to be like 7 different websites. You'd have GDAX with pro trading experience. Now they do Coinbase One, but there's a monthly subscription fee of $30. Gemini Pro Trader free, 15 basis points either side versus 100 basis points on the retail platform. So if you're trading crypto on a US exchange, make sure you are always trading on a pro account. You're going to save a ton of money on fees. Typically the fee is 100 in, 100 out. It's down to 10 to 15 bips if you're on a pro account, and on a lot of exchanges it's free or it has a de minimis cost. So money saving tip. We love managing our expense ratio.
Throw up slide 1 as we say goodbye to Melton. Throw up slide 1.
Melton, we'll have to get you
a little
back.
RNDR. This is the one Melton's calling out. Already an investor, Melton. I paid this $670 million, slightly under $1 billion in market capitalization, so not that small, and it's already been trading for a couple of years, so it's not like it's a new issue. Been around. There's some history here.
Yep, and the company's been around. Otoy, the parent company, has been around for over a decade. Very credible team. Jules Urbach, the CEO, I think is very inspiring when he speaks. But just with everything happening with GPUs and the insane demand for high performance computing, we're going to see more sort of tokenized compute networks. And I think compute is an asset. We've never been able to financialize it. In 2013, looked at some startups trying to monetize cloud computing futures. But I think now with tokenization, we can actually start to build markets where people can buy and sell compute capacity That's what Bitcoin does. We sell hash rate. So now we're going to sell other types of compute, generalized, high performance, highly specified compute. We can get into it more. I love geeking out on this.
Next time, Melton.
We'll do it again.
I'll stop.
All right.
Hands are going to go away.
Thanks a lot, Melton.
Thank you, Melton. This is great.
All right, man. We could have gone for another 20 minutes,
gone
but
forever.
the show must go on. And I really want to hear from Kimmy because
bring on quick.
She closed out for her a long-term trade yesterday, and let's talk about that. Kimmy.
Hi. Happy Friday.
Wait,
Kimmy's like, can we stop with this crypto stuff and get back to stocks?
Yeah, I'm with, as someone say, let's talk about the real stuff. I'm not a crypto person.
Wait,
I'm with you.
Can I hear about this Hess trade that you've been in on since January? You closed it out yesterday?
Yes. So typically I keep stuff like that in my longer term account, but like I was hoping when I traded it that it would have popped up to the 155, 40, 50 area, and it did not. I could have gotten out of it, but I like oil names, as you know. I'm like an oil person. So I stayed with it and I added along the way on lots of dips throughout. I didn't list them all. I had like over a page in my TD Ameritrade. I was like, this is this. And I would tell the room, I said, listen, most people you have to stop. A lot of people you have to stop out. But I say, hey, you want to buy, if you want to add to Hess, you could add here. You could sell here. Okay, I bought it like 140, sold it 145. Bought it like 125, sold it like 130. I like went back and forth, adding like it popped once up to 150 and I didn't get out. And I was positive on the trade because I added throughout. And so I finally yesterday hit 151. I said, guys, just be careful. The market was pulling in. It didn't look, I didn't know if it was going to push through. It could consolidate and still hit my ultimate target at 155.40, but we'll see.
Right.
Awesome.
Talk about today, Kimmy, Baba. Shocking. Kimmy's looking at Baba.
Yeah. We'll see how it goes. Today's Friday. Like I say, it's option expiration. I don't love trading Fridays. I feel like it's like 50-50. We got to see, we had a decent, nice sell-off yesterday, a lot of reversals, but then of course today we're gapping up. So it could be a one-day wonder. So we'll see if I'm going to see if Baba hangs on to 98. Maybe we get a move up to 99.20 or so. Baba's volatile, and you always have to be careful holding those names overnight, right? They gap down, they gap up.
Yeah, keep in mind these Chinese ADRs. Yeah, they're rarely going to open where they closed the previous day.
They'll never open. They'll never open when they
Correct.
close.
So it's always difficult, So we'll see.
All right, cool.
All right, guys, we're running late. Join Kimmy's room. The link is in the chat and description. She's there every day, trading, calling out her winners as she is making them. Kimmy, go get them.
Thanks. Bye, guys.
All right. Kept her a little late today, so sorry, Kimmy. I know you have to get to your room. Don't like to keep her too long because the people in the room.
Friday. It's not day trading Friday. It's crypto Friday.
The people in the room are waiting. Okay, let's do a couple more on my list here. I wanted to talk about, as my computer freezes up on me, Roku. Big beat for Roku here overnight as my screen freezes. So let's bring the chart up on the screen so I can read the numbers from the chart. There it is. Oh man, look at that EPS beat. Huge. Guy estimate was for a loss of $1.27. They only lost 76 cents per share. Big sales beat as well. Wow, $70 million. Anyway, stock is up this morning and holding on to all of its a good chunk of its gains from the overnight session. So Roku, thoughts, JC?
Listen, it's a big base. We talk about this every day. How many charts out there look exactly like this? And, one of the common themes is that charts that look exactly like this continue to resolve higher. I think this one is going to be no different. Here we are sitting right around 75. Big numbers at 78. That's been resistance over the last year. If we get that breakout above 78, we could see this around 110, 120. So that's what I'm watching. Below 78, it's still basing. I'm getting comments about my Dolphins shirt. It's a good one. Football season's around the corner. I'm representing. Casual Fridays here on the morning show.
Yeah. And every day is a casual Friday. What else was on my list here? I had Boston beer on there only because it was like the number one gainer this morning on my filters.
That's
I do-
Sam.
Yeah, Sam. They crushed it. They crushed it. They blew the numbers out of the water. On the headline numbers, EPS and revenue. So I also saw that Anheuser-Busch is doing some layoffs, but Boston Beer, I guess Sam Adams is looking good. And didn't they buy? Was it it wasn't Tap? That's Molson Coors, but they bought like was it Kraft? What was the ticker?
They own, you ready? They own Twisted Tea, fun fact.
Yeah.
They own Angry Orchard, they own Dogfish Head, they own Coney Island, Havana Lager. I didn't know that was a thing. Is that Cuban? I doubt it. Right? Take a look at this hot mess. Throw up slide 1 here. What a mess this thing. Look at this thing. So just ripping off the lows now. Just understand where this thing comes from. Just what a disaster, talk about a round trip. COVID, everyone's drinking beers, and then it's like, oh shit, we're drinking too much, and the stock gets crushed, right? Is that what happened?
I'm not really sure. This thing is like really volatile for whatever reason. I've never really known why. Like it's done that several times. If you go back to like 2015 too, this thing went from over the course of a year, it tripled, right? So, and then it gave it all back again. So I'm not really quite sure why. And then how high did it get? $1,300.
Yeah, here I'll just
$1,300. I swear I have no memory of this because everything was doing this.
Throw slide 1 there. Throw slide 1 there just to zoom out so you can see what Spencer's talking about. It's been long-term uptrend for a long, long time, but it's had a lot of, massive corrections along the way. So just kind of keep that in mind. This one's no different. So, listen, throw up the first chart again where we're bouncing off that support. If the stock's above 300 and you want some American beer exposure, this will get you done. This one, in case the name didn't give it away, Boston Beer Company from Boston, Massachusetts. Can't believe it.
From Boston. Yeah, I like Sam Adams, and I like Angry Orchard. I had some over the weekend. Good trades.
I don't drink any of that stuff.
I know you don't. You're much more of a wine guy. Okay, that is the extent of my list here. We did not cover. I want to see if it's still down this morning. Is SNBR still down a lot? Yes, that's the big loser of the day. Sleep Number. I guess no one's buying beds.
I think they were buying beds. I guess they stopped. This is a piece of hot garbage. It's not even $1 billion. If you're not even $1 billion company, I can't take you seriously.
All right, fair enough.
Dogecoin's $11 billion, for the record. So if you're a stock, like a real company with like employees and earnings and all that shit, and you're not even $1 billion in market cap, I can't even with you.
If you're not big on the Dogecoin, then what are you even doing? All right. Do we have anything from the hot corner today, Fonz? I think we did. I thought I saw a couple.
Throw it up. Let's do a little hot corner. A little hot corner action. No big deal.
Hot corner. So hot right now.
Wow. Look at the table today.
What do you got?
It's bigger than it has been for the last several weeks. We got three buys.
I'm glad that Strazza is coming back on Monday. He'd be very excited about this. 0.72, filing a 13G on HCAT.
It's the second time we've seen 0.72 in the last 2 weeks.
0.72, making moves, right? It's a little company. It's under $1 billion. What did I just say? If you're not $1 billion, I can't take you seriously. But 0.72 likes it. That that's probably not a bad thing, but this thing still has some work to do. It's not where it needs to be.
Also, I love these transactions from these smaller banks. I think there is a consensus now that there's about to be a lot of consolidation in the financial sector, and a lot of smaller banks are going to be snatched up. And obviously, no one knows who that is.
But these are piker transactions. So I don't know this guy Robert W. Stalling.
Yes, they're small.
He bought 120,000 worth of stock. That and zero might as well be the same thing. This other gentleman, Dennis Archer Jr., he bought 115,000 of this other bank.
I know. It's
if they're like, put up some real money. Like, this is nothing.
All right. All right. On the unusual option side, Anheuser-Busch, we just talked about that for a second. Goodyear Tire. Oh, look at that. Interesting. 8,000 calls in Goodyear Tire. How's GT doing?
Are you into Goodyear tires? I mean, this thing's a mess. Like, there's just nothing to do here. It's just a sideways, messy mess.
I don't know. 52-week high.
Yeah, zoom out. Zoom out. I mean, it's just messy. It's just long-term messy chart. I mean, yeah, it's making new 52-week highs, but what isn't? I mean, if your stock's not making new 52-week highs, like, you're in the wrong stock.
We got a one Sean McLaughlin into the chat.
Shotty baby is
they
back.
Survived. They're home after over 3 weeks. They were gone for, we'll just call it 3.5 weeks.
What do you think, Sean? I know you're exhausted. On a scale of 1 to 10, how was the trip? Looks like you certainly ate a lot, especially in Manila. All you guys were doing was eating.
These guys left. They left on the 4th, right? And
they left on the 4th. It is now the 28th.
Oh man,
they've been gone all of July.
Oh man.
Sean says it was an 11. Wow.
Can't wait to hear about this next week.
All right. I know. I'm looking forward. I've heard some stories. I feel like there's some stories that they're not going to tell us. There's like, what happens in Ho Chi Minh stays in Ho Chi Minh, or know. God knows what they were doing in Bangkok. I feel like they're going to tell us a lot of stories, and then they're going to have like this like secret society amongst the 4 of them. They're not going to tell us like certain things that happened in Kowloon or something, Yeah,
I don't know. But if you're wondering what we're talking about, we sent a few of our guys over to Asia for over 3 weeks, actually. And the whole idea was to do a documentary about talking to traders and investors from that part of the world and see if we can learn from them as far as how they approach the markets, how we can maybe use their psychologies and philosophies to help us with our trading and investing. And we're calling that documentary Wall Streets to All Streets. I'll put the link on the screen. I'm also putting it in the chat as well. If you click on that link and sign up, you'll get invited to our watch parties, and you'll get early access to the documentary as it airs episodically. We're not going to do it all at once. So definitely do that, because it's going to be a really fun time. And if you want stories, that's where you'll get them, right? Is in the watch parties. Is not so much maybe in the actual documentary itself, but they're saving the good stuff for their watch parties. We hope. So, all right, there's the code on the screen. Check it out. Huge thank you to Centerpoint for helping us to make that trip happen. If you use that code on the screen, if you scan that code, the QR code for Centerpoint, and you use that code, that's our link. That'll get you 60 days of no commissions on Centerpoint. It is a powerful trading platform known for for 3 things. Known for their order routing, very advanced routing, their in-depth short locate lists, or all-encompassing short locate lists, and for their customer service. Those are the 3 things that they hang their hat on. They, of course, have the DOS platform as well. So check it out. Centerpoint Securities, huge shout out to those guys for helping us with this trip. Okay, 9:34. Today's Friday.
Yeah, can we do a little chart report? Action. I got a good one.
Yeah, is Ian Culley joining the show? I never talked. I guess I should. I guess maybe he's on the calendar. Let's talk to Ian. Yeah, you want your chart report?
Yeah, let's do it.
Yeah, there was a couple of good ones from yesterday.
I want to scroll all the way down to Todd Sohn. Bringing up Todd Sohn so much these days. Todd Sohn getting shout outs like almost every day.
Where is
he's going to be a guest on our show next week. Todd Sohn here bringing up the number of mentions of AI here in blue in Bloomberg articles, and in red the number of mentions of the metaverse essentially going away. Todd here talking about the real pivot as he calls it. And he says that there's a clear difference in how Wall Street views the metaverse versus AI. Like metaverse, he says, why would anybody care? Clearly nobody did. But AI is real, actual productivity boost. So interesting on the mentions. Metaverse has just gone away completely. It's all about AI. Make sense?
Yeah. Something else I wanted to highlight is we always skip over this part in the chart report, and I know JC always skips it, but I don't always skip it for myself. And that is this section, the top links. This is my favorite section actually of the chart report. Every day there's there's 4 or 5 links in here. I always click on at least one, right? Always click on at least one of them. And again, Pat does a really good job of combing the interwebs, the World Wide Web, for the best research and the best analysis. So check out this section as well. It is my favorite part of the chart report itself. What else? Anything else jumps out to us here? Oh, big bearish candle yesterday, JC. Did you know that? What else do we have?
What I find interesting is that how everybody's now an expert at Japanese candlestick charting, and how everybody knows what an outside day and engulfing day is, and all these experts just fail to mention that none of this matters unless there's follow through the next day, and all of these quote unquote experts fail to bring up the most important part of the whole thing.
Sam goes, he always skips the notable links in the chart report. The reason I like them is because
it goes in depth. It's not just a chart.
The chart report itself takes me like 30 seconds to consume, right? But if you want to spend a little bit more time on this stuff, then it just more.
There
detail.
are rabbit holes that are provided for you.
Yeah. I like hearing someone's elaborated thoughts on the market. Right, especially when the headline is enticing.
Depends on who it is.
That's true. So, okay, chart report, guys, get it. It's free. It goes out every single day. Well, not on the weekends, it doesn't. But every day the market's open, it goes out. It is a compilation of all the best charts from around the world of FinTwit. Scan the code on the screen. Use the link in the description to get it. Super easy read. And Pat does a fantastic job. Pat and Intern Evan, I think is going to join the show next week. He just had his wisdom teeth removed, so he can't really talk right now. But next week he'll be back, and I think we'll get Intern Evan on the show.
Intern Evan going to be a freshman at the at Virginia Tech, Blacksburg, Virginia. Lovely this time of year.
Intern Evan is a chart degenerate. He is messaging us about charts on like Friday nights.
Well, there's a reason why he's our intern. Like if you're not a chart degenerate, like you're not going to be our intern.
I get notifications from Evan at like ungodly hours.
You can turn those notifications off.
Some of us like being notified of when things are happening in our work. I don't know. Maybe it's just me. Okay. We'll get Evan.
For the record, I don't know how to turn notifications off, but I'm told that you can. Well, I obviously don't. Intern Evan, shout out Intern Evan, freshman. And I was like, oh yeah, the Hurricanes play Virginia Tech every year. They play against VTech, and this year they're not playing VTech. So I look like an idiot.
Bummer. All right, Ian Cully is going to hop on for a couple minutes here. For a couple minutes. What else did we have here? No, actually, I think that was my list. I thought we would talk about the Japanese yen a lot more than we did. That's okay though. I don't really care that much.
Listen, the fact that Spencer Israel is asking me to talk more about the Japanese yen, like it must be Friday.
It must be Friday. Speaking of Ian Cully, we are going to have What the Fic, 11:30 a.m. Eastern time today. So stay tuned for that after this show, and that'll be it for our shows. Oh no, that will not be it for our shows this week. JC, are you still good for Lunch and Learn today?
I'm here for Lunch and Learn. We are going to talk about Japanese candlesticks.
Very funny. All right, 1 p.m. Eastern time. JC's going to hop on for a few and just freeform. If you missed mine last week, I just basically went for 45 minutes about how I research ETFs and the metrics that I look at and how I find ideas. That's on our channel if you want to watch it. It was just basically me talking to myself but I had fun. So Jason's gonna hop on today at 1 o'clock for a few minutes and talk about something. The whole idea is, it's lunch and maybe we'll learn you something.
The chat wants me to talk about my mandate yesterday. Can we talk about the mandate?
I mean, I guess you could. I don't know how educational that would be, but
you don't know how what that would be?
Educational, right?
Well, so listen. So first of all, Omakase in New York is amazing. There's so many good places. This place, Geico Genko Omakase down in the village, right by NYU.
Doesn't that mean welcome in Japanese?
I have no idea.
Genko.
My family's from Cuba, so I don't know. Tom Lee is the man. We crushed it. We both really liked the place. He's Korean, so I feel like his opinion's more important than me. My family's from Cuba. Another fun fact about Tom Lee: his family came from Korea in 1962, the same year my family came from Cuba. What a small world. And he lives in Connecticut. I didn't know he was in Connecticut. I went to Fairfield U. Tom Lee from Michigan, from Ann Arbor, Michigan. Did you know that, Spencer?
I did not know.
Well, yep. So Tom Lee from Michigan, his family still lives out there. He's out on the East Coast. A graduate of Wharton, UPenn School of Business. He was great. Awesome. I had met him a bunch of times, but I had never actually sat down and actually just had a one-on-one conversation without being interrupted every 2 seconds. One thing he just loves the markets. He can't get enough. He's one of those. He's bad. I'm we're talking about other sushi places. He's like, all right, JC. So what about the 10-year? What do you think about the 10-year?
That's funny.
I'm like, yo, that piece of tuna was really good. He's like, yeah. So the dollar. So what do you think about the dollar?
No, because because you have a reputation for being the guy that looks at the value of Bitcoin in rupee, right? So people want,
he's more of a fundamental guy, but he really appreciates the technicals.
Yeah.
He always has a technical analyst working for him. So he's,
Yep. By the way, I was very wrong. Genki does not mean, I don't even know why I thought that. It does not mean welcome in Japanese, or whatever I said. Okay, whatever. Ian Cully's here. Ian,
bring him out.
Give me a thumbs up if you're ready. Thumbs up from Ian. Okay, let's do it.
Good morning, guys.
Hey, what's up, man?
What's happening? Long time.
Rico Suave look right now. Ian
Yeah, man. The hair is
long, man. It just got too heavy.
Yeah, we gotta bring it down. I like it. No, I like it. Listen, you got a bull market haircut on. Okay. So here's what's on my mind. So Ian Cully focuses on fixed income, commodities, currencies. And when I look at the outperformance we've seen in technology and growth this year, to me, maybe that's suggesting lower rates. And then I see inflation protected treasuries outperforming nominal yielding treasuries, crude oil sort of inching up a little bit. Some of these commodities, like an orange juice, you're looking at some of these commodities doing their thing. That's pointing to higher rates. So 10-year yield kind of just in this range. Large speculators, the most short bonds ever, which they're betting on higher rates. So do I want to be betting with them? Usually I don't. I got more questions than answers, Ian.
I think you've made so many points. There are a lot of questions out there right now. When I think it comes to bonds, I think it's just a good time just not to be betting on bonds.
And stock, and because of the range, and stocks seem to like that.
Yeah, and there's just so many areas of the stock market that are doing well and providing amazing opportunities. Go fishing in the stock market. I mean, look at energy right now. I've been focused on energy the past couple of weeks. You've been pointing out energy. I mean, it's just it's really starting to perk up, and the trade ideas are there. I'm going to highlight some of those later today.
When it comes outside of offshore drillers and some of the oil services, any group standing out?
I think the services. I think oil services are definitely the strongest. There's some E&P names that I like. What's really interesting is when I look through the different industry groups, a lot of the individual names are carving out, similar patterns. I'm going to lose my voice again on this show. I'm telling you. No, but it's really interesting. I'm gonna touch on each individual group today. But what's funny is I'm highlighting a lot of the names that we were talking about, at the beginning of 2022. names that we started to reiterate at the end of 2022 and in January of 2023. And now we're going back, we're retesting or challenging these former resistance levels. And, based on some of the relative strength studies, based on some of the momentum studies, it looks like they're ready to go.
Can we look at this dollar index? We've seen, what, is that funny?
No, it's messy.
Well, it might be messy, but the stock market has had such a strong negative correlation with the dollar for so long that if the dollar's rolling over here, there's your catalyst to take equity stronger in the back half. But if these support levels from the dollar index that have held all year, if they hold again and the dollar rips here, stocks are under pressure for the rest of the summer, no?
Yeah, well, I think it depends on what stocks we're talking about. I think if the dollar starts to rise, let's not say rip. If it starts to catch higher here, I think we continue to see maybe a little bit of a correction in like the growth areas. A lot of those big names like Microsoft, Meta, I know they're continuing to do well, but they're at logical levels to digest their recent gains. Even on a relative basis, growth is at a good spot to take a breather. And now we're starting to see that rotation into industrials. Even lumber stocks are doing well, steel stocks are doing well, and energy, like we'll point out later today. So I think seeing that rotation makes sense with a slightly stronger dollar, because the dollar and rates have really tracked each other for the past year and a half. And it's kind of broken down in the past 6 months. I don't see a strong decoupling quite yet. I think if we do get a decoupling between rates and the dollar, that would be really interesting. I'm not there yet, on my radar though. But I think now we're seeing that rotation, and just again, it depends on what stocks we're betting on here. And I think it's time to start betting on those cyclical value areas of the market.
Let's move into some of the agricultural stuff. Orange juice making new all-time highs. Nice little squeeze going on.
Yeah, it has been absolutely ripping. It went up and hit our one of our key Fibonacci extension levels and paused. And now it's continuing to rip higher. Cocoa's doing the same thing. Cocoa's coming in. It's approaching our key extension level and former highs. What's interesting is cattle hit our upside target and is starting to correct.
Both the feeder and the live cattle.
Yeah. Mostly the live cattle. Live cattle hit our target and is starting to correct. So seeing those names correct, seeing the grain start to rip makes sense. And it makes sense now to start seeing those other areas, those pro-cyclical areas of the market. We're talking base metals, talking energy, start to assume leadership again after of underperforming for the past, say, almost a year.
And what about the sentiment? How sentiment? You got fund managers the most bearish towards commodities since crude oil was trading below zero a few years back.
I think a lot of that has to do with
performance.
Performance. It has to do with performance, and I still think a lot of fund managers and investors, just in general, have not accepted the possibility that we are in the early stages of a commodity super cycle. That's one.
Do you think we are?
I think we are. And then number two, the past 6 months, I think tech has thrown and growth has thrown a curveball to many investors in the sense that there's strong outperformance and these rip-roaring rallies from these names, are kind of tricking investors into believing that we're heading back into, the last decade of investing. I don't see it yet. When we have rates continuing to remain elevated, I think the 10-year goes to 5.25. I think many analysts are on board with that. I don't know. I'm not too worried about it, but I think that's where rates are going. If that's where rates are going, Doesn't mean tech has to fall apart, but I think there's going to be other areas of the market that are going to outperform.
100%. And you can have strength out of materials and energy and even industrials, and the weighting in the major indexes are so small. It's in the S&P and the NASDAQ, they're non-existent, literally.
Right.
So you're going to see underperformance out of the indexes, but huge winners underneath the surface, right?
And huge winners overseas.
Yeah, and it also comes. That's also a function of the types of stocks that are in those indexes overseas, which is not a bunch of tech. In the United Kingdom, it's 0% tech. Brazil is 0% tech.
Absolutely. I mean, and I still like tech. I just think there's going to be better places.
Yeah, that's the question for me. So it's like, okay, I was talking with Tom yesterday. He's like, "What do you think? Where's the S&P 500 going to go next year?" And I'm like, "Listen, bro, I don't have to play that game. It's a stupid game to play. I understand sell-side analysts have to play that game. I don't." Starts laughing. I'm like, I did that when I was younger because I thought I had to, and it just ended up being a distraction. And he's like, Mark Newton says the same thing. And I'm like, well, me and Mark Newton are literally trained the same way. So like, he's like, this sounds awfully familiar. So I don't have to do that. But, I was like, so here's how I think of it. If we're in a scenario where we're getting that leadership out of financials and industrials and materials and energy, and tech is selling off or flat, the indexes are going to be pretty flat. So the question becomes, does tech do okay? Does it hang in there? Does it rally a little bit carrying the indexes, or does it drag it? Like, that's really the question kind of that I see. And that's going to be the answer of where the S&P 500 is going. But to reiterate my first point, I don't necessarily care that much where that particular index goes. It'll go higher if tech participates. It won't if it don't.
Yeah, absolutely. I mean, you nailed it. And I think when we find out whether or not the indexes can remain buoyant during this next correction in tech, I mean, that'll be the answer on whether or not the stock market and investors have really recalibrated and adjusted to this new rising rate environment and this possible commodity super cycle.
We had a question in the chat about commercial positions in cocoa, and we have the table here. Can we get that up? Yeah, right here.
So you can't read it because there's a lot going on. So you got to zoom in to read it, but nevertheless.
Yeah. Well, they're extremely short, but you got to keep in mind that commercials, they are the strongest short sellers in any particular commodity.
And from a timing standpoint, it's not great.
Exactly. From a timing standpoint, it's not great. We're looking at, I believe our level's around 38.
But cocoa's ripped.
That's the handle
hedgers are selling into that.
Yeah. So exactly. So I mean, we
They're
got
hedging.
long.
They're
we
literally.
We got long a while back. So now, I mean, we're net sellers. So I mean, we're looking. I took some profits a couple weeks ago, and I'll be looking to take more profits here. Probably, I imagine this thing continues to rip. Let me pull it up right now and see what it's trading at this morning.
Yeah, commercials are feeding the ducks as they should. That's their job.
Yeah, it ripped yesterday. It's kind of unchanged this morning. The 35.
Favorite commodity for the back half, Ian, before recess. Go. You can buy one commodity back half. What is it?
I have to pick one of the energies. I'm partial towards natty gas just because of the base of this carving out right now.
Yeah.
Just because of how far it came off. When we zoom out and look at the charts, it's basing at a level where it's based time and time again over the past decade and a half. And we're heading into an extremely favorable season. I'm not big on seasonality, but I pay attention to it. It's not a major, data point.
The positioning.
Yeah, it's like positioning. Yeah.
No, but I'm asking how positioning is right now. Commercials, they're leaning long, right?
Yeah, they are, and that's a signal in itself in that they believe that natty gas is cheap. Right. So when they start to flip and unwind and sell, that's when we get the rep.
Why don't you throw up slide 1 there for the kids? Coming in hot right here with your natural gas. See what that looks like. Look at that. This is what the commercial hedgers are seeing. Right? Whenever it's down near these levels in the mid to low twos, they're stepping in. And they're rewarded every time they do that.
Yep.
And they were rewarded the most the last time they did that a couple years ago, you know? So they're back at it again. Makes sense. Want a little recess? A little recess before we go there, Spencer?
Yeah, Ian, you want to hang?
Yeah. Love
All
to.
right, let's do some recess.
All right, for me, very simple. Yesterday was a bad example. I did a little too much walking in the city for my taste. But in the spring, even a nice day in the winter, certainly in the fall, you know, walking through Soho, West Village, Tribeca, like that whole area, Washington Square Park, you know, Greenwich Avenue, like Bleecker, like that whole area. I love being in during the day. Places where historically I've partied at night. I like walking through during the day where it's a totally different vibe. New York City, I really, really, truly love that city. Yesterday was not the day to be walking around, but if you catch New York on a bluebird day, you know, a little air, you know, in the 60s or something like that, man, there's nothing better. And if you got meetings, you know, you don't have to have a lunch meeting. You can go for a walk meeting, and make sure that it's south of 14th Street. Midtown sucks, dude, and it's worse than it was. You don't want to be in Midtown Manhattan. Go downtown.
We got a recess question, JC.
What do you got?
Yako wants to know if you've ever had omakase at Sasabune in Manhattan.
Sasabune.
Sasabune.
I don't think so. Is that that's not the one on the west side? No, this is upper west. No, I haven't been there. Sasabune. Do I need to go? Should I put it on the list? All right.
I don't know. Yako, I don't know.
Sasabune. All right. Traditional style sushi. That's me. I'm into traditional style sushi. I also, another quick fun fact. I just want a quick bite before coming back home yesterday, and I was in the 30s. I was in shitty Midtown Manhattan, and I went to K-Town, and I got me some delicious like honey fried chicken. K-Town.
Is that Koreatown?
Yeah. Yep.
Ooh.
Great part of town. Good eats. You know, to Sam Rowe said it himself when he was on the show. Just go to 32nd Street. Just go to the one with the shortest line. You're probably not going to go wrong. And he's right. It's great.
Yako says yes. You should put that on your list.
Upper West Side's a little north for me. Well, I'll make an exception.
It's not far.
I was going to say
actually.
Spencer's right there.
Yeah, it's not that far from me.
Spencer decides to cross a river every now and then.
But my recess is seeing Oppenheimer tonight, doing some boots on the ground DD on Kava, and also just stay inside today. It's going to be a miserable day. So.
It's going to be really bad today.
It's going to be awful. So just stay inside. And what the heck is happening with Chinese stocks right now? TAL, Mary just messaged me, but it's not just that.
Holy shit, this thing's up 16%.
Billy, BILI, up 15% today. Not so much the big ones. I mean, Bob was up 4%. JD's up 5%.
Not enough for you?
Gives?
Are you not entertained?
Not enough juice for me.
K-Web working
Rachel,
out nice for those of you in it. CQQQ.
And Rachel, I do cross the river. It just, I have to plan for it. It's a big event. Ian, you got anything?
Gonna run to the beach. Take the kids to the beach. My son turned 5 last weekend, so got him a little soft board, a little red surfboard. It's his favorite color, and he's just out there every afternoon.
How far do you live from the beach? You close?
10 minutes.
Nice.
Yeah, it's crazy. I get stuck, doing things that I don't need to be doing, and I build this barrier mentally where it's just 10 minutes away. So this week I've been taking the kids out every afternoon. It's just so easy. Like, we don't have to pack up the cooler and have the cart and everything. We just have a backpack, run down to the beach, play in the water, get a shower, come on home for dinner. It's easy.
That's the way to live.
That's the way to do it, Ian. I like it.
Ian and I will be back in an hour and a half for What the Fix, so stay tuned for that. JC on at 1 for Lunch and Learn. Everyone else, have a great rest of your day if you're not going to join us there. Thank you to our guest today, Melton Demirs. Thank you to Ian. Thank you to Kimmy. Thank you to you in the chat. Drop us a like. Hey, if you want to subscribe to our channel, we would also appreciate that very, very much. All right, we're done. Go make some money, catch some waves, and maybe try to stay inside. It's going to be hot today.
All right. Adios.
All right.
Run it. I can't take no loss. I don't need no